welcome to Stock Market Today, sponsored by Interactive Brokers. It's Alyssa Corum here with Justin Nielsen. Welcome back,
Thank
Justin.
you. Thank you.
Good
to be back.
Hiatus. All right.
Well, it was good to be off too.
Sure, of course. But anyway, on today's show, we're going to be taking a look at the transportation sector as well as one notable name that is still at risk for those headlines related to China trade.
Yes. Mm-hmm.
But first, let's take a look at the major indexes. We did finish down across the board. The Nasdaq falling about 0.4%. The S&P 500 as well. The Dow down just a hair, but all in all, we're still sitting pretty at highs.
Yes, exactly. So this could have added an extra distribution day because volume might be coming in a little bit heavier than yesterday. Yesterday was very low. So distribution is still mild. You know, that would only be around 4 distribution days, and we're at highs. So there's not too much damage being done out there. But what was kind of interesting today is that what was moving. You know, the transportation stocks, of course, were among the big gainers. Tech stocks weren't getting hit too hard. So, so far so good. The S&P 500 looks like it's holding right there above 3,000. The indexes are at their new highs. The Russell kind of led a little bit today. It was actually up, whereas most of the indexes were down. So, all in all, things are still looking okay, but we are extended, so you got to be careful.
Yeah, and it looks like those psychological support levels are still intact for the time being. But let's take a look under the surface. You mentioned a notable group moving today, the transportation sector. So we want to look at a transportation ETF from Direction. This is a triple leveraged one, and it gained about 6% on the day. Yeah,
so now this is, as you said, a triple leverage. So the Dow Jones transports were up about 2%. This was up close to 6%, and the symbol on this is TPOR for transportation, of course. And again, this is a triple leverage, so it is going to do whatever the Dow Transports does, about triple that on a daily basis. You always have to be careful of these leveraged ETFs because long term, they don't necessarily get that triple leverage. It's really kind of geared towards the daily. But what we had going on here, JB Hunt was one of the stocks that was reporting earnings, and it had a lot of growth there. You had airlines, United Airlines, Delta Airlines, those were showing a lot of strength. You had the rails, Canadian Pacific, CP, that was up a lot. And you've got CSX reporting after the close today. You've got United Airlines, UAL, reporting after the close. So there's a lot of earnings-related movement going on here. And a little bit of earnings positivity on one side led a lot of stocks to be moving elsewhere. And part of that is also a lot of people looking at the economy saying, okay, can we get a little bit more out of this? Are these recession fears very large, or can we get a little bit more out of this economy? And with the Fed potentially cutting rates, that kind of does point to maybe we can get a little bit more.
Yeah, mentioning earnings season, hopefully that's a pretty good window into at least some perspectives on that front with guidance from some of these companies. But we do want to take a look at Old Dominion Freight Line, ODFL, gaining over 3% today. It's approaching a buy point as it works on a base, but we're going to be taking a look at a weekly chart here because when a stock is building a base, one of the components of our analysis is that relative strength line. And when you put this in the bigger picture, even though it is working on a base, it hasn't been outperforming in the short term or shorter term. Looking a little further back, it did see a pretty big move.
And what I wanted to kind of caution people here with the transports, where as much as there's a lot of movement there today, these are kind of tough to hold on to and make gains from, squeeze profit out of, because they don't tend to be big movers. They're very cyclical, and so what can happen is you can have these long periods of huge lagging relative strength to the point where a lot of times you might just say, well, why don't I just invest in S&P 500, buy SPY, the spiders or something like that. So just one thing I wanted to point out with Old Dominion here, ODFL, is that this does have the tendency to sometimes act like a growth stock. And we saw that back in 2017, as you mentioned, where on the weekly chart, you can see it had that really big move. So far, it's been, acting off really flat this year. But this is something that can move. Whether or not it will probably depend on its earnings report when it comes out.
Right, and there's obviously so many factors that go into this, but perhaps it seems that one shortcut maybe investors can use is if you see that relative strength line at a new all-time high as a stock breaks out, that's pretty indicative of outperformance right then and there.
And here again, you have to look at who the leaders are and who the leaders aren't.
Right.
JB Hunt, for as big as that move was today, that was a stock that was below its 200-day moving average line, and it got right up to that 200-day moving average line, and then got resistance, and kind of fell off from there. So you have to; they're not all created equal.
Definitely. All right. Well, let's also analyze Baozun, which reversed lower today, down about 0.7% after a pretty good-looking gain in the early going after a relatively recent breakout. So this China stock definitely exposed to the headline risk out of the back and forth of the China trade war here. Trump saying that this could be dragging on.
Yeah. There's a long way to go, I think was the way he referred to it to a reporter. And there could be more tariffs on the way. So, of course, Baozun, as a Chinese stock, it was doing fine. It was up, I think, 5%, shortly after the open. It was a very strong open, kind of coming out of that short little consolidation there.
Yeah, so a potential swing trade.
Yeah, we put it on Swing Trader, and it undercut the day's low, so we actually removed it. This is also something that's on Leaderboard. We were adding to our position there, turning it to a full position, but we kind of scaled back because bearish reversals are something that we have to be very cautious of. You can also see that there was a lot of volume on this today. So it had been going sideways, and then that volume came in on a bearish reversal. It doesn't mean that this is necessarily broken. We still kept a half position on for Leaderboard, but it does show that there might be some short-term weakness, and that's why we took it off Swing Trader. So depending on where you got this, you have to just be really kind of managing your risk at this point. If you bought it at the highs today, you're looking at a 5% loss. Now you're already approaching your 8% stop, and so it's a little bit tricky if you bought it extended.
Right. This environment a little bit tricky with these headlines that can turn things around. So you got to be aware of that when you're playing some of these China stocks, even those that are looking really technically strong, like Baozun. But elsewhere, exposure on varying levels for semiconductor stocks, namely as well. So just approach it with caution.
And along that headline risk, we have earnings season. So I want to talk about some headlines that can really affect your stocks. Earnings season, you always have to be very careful, making sure that you have some cushion holding on to those stocks if you're going to do that through earnings, or just wait and buy it after the earnings. And that sometimes means gaps. And we'll be actually talking about that at the podcast.
You beat me to the punch. I was just about to say that. We have Chris and Justin on the podcast this week, dropping Thursday, talking all about stocks that are setting up this earnings season, which is now underway. And we also want to let you know before we go that you should definitely sign up for our newsletters if you haven't already. There's a lot to choose from, and you can go to investors.com/newsletters to sign up for free and to find the best ones that work for you.
Yep, absolutely. There's a lot to choose from.
There are a lot to choose from. Lots of great stuff there. All right, everyone. You can also check out our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So follow and subscribe to stay up to date and get those live notifications. Thanks so much for watching, and we'll see you right back here tomorrow.